Jenny Turner, Lovejoy Real Estate, and I'm so excited today to talk to you about FinCEN. And the first question, of course, is what is FinCEN? And we're going to get into that and how it works and how it affects you as a buyer or you as a seller. Joining me today is Matt. Can you introduce yourself?
Yes, Matt Sandler, Legal and Underwriting Counsel for WFG National Title Insurance Company here in Oregon.
So nice of you to join me.
It's a pleasure.
Can we start with the first question? Just what is FinCEN? What does that mean? What does it stand for?
Absolutely. FinCEN, Financial Crimes Enforcement Network. It's a division of the U.S. Treasury, and they are charged with requiring certain reporting for suspicious and illicit financial activity.
It's like money laundering.
So like money laundering, exactly.
Okay. And is that why these rules changed? Was it to try to balance money laundering, or what was the intention behind it?
The intent of the FinCEN Residential Real Estate Reporting Rule, which is what we're going to be talking about, was exactly that. It was put in place by essentially the federal government, the Department of the U.S. Treasury, to combat illicit financial activities such as money laundering, the financing of terrorism, etc. And this stems essentially from these temporary orders that were put in place back in 2016, what were known as geographical targeting orders, where we kind of had a limited version of this rule in place for certain areas of the country where there was deemed to be higher level of these illicit activities. And that started in 2016. And according to the federal government, there was some successes out of that program, and then we evolved into this nationwide reporting rule that we're discussing today.
Okay, and that went into effect on March 1st?
That went into effect, the FinCEN, the new rule, the Residential Real Estate Reporting Rule went into effect March 1st of 2026, correct.
And then it got paused or struck down when?
March 19th of 2026, so a couple of weeks after, which is quite crazy.
So let's start with practically what does it mean for a buyer or a seller?
So when the rule was in effect, prior to the pause or prior to the district court vacating the rule, for certain residential real estate transactions where the purchaser was an entity, i.e. a non-individual, was using all cash or non-financed money, essentially non-institutional lenders, that transaction details were required to be reported to FinCEN through closing.
And I know an entity like an LLC. I ran into it with an LLC. Is a trust also an entity?
A trust is also an entity. So any non-individual.
And lots of trusts pay cash.
Lots of trusts pay cash. Lots of individuals, also a lot of entities rather, also use kind of non-financed money, whether that be private money, hard money lenders, all cash, etc. Kind of fell under this rule.
I was going to ask about hard money. I wondered if that also hit that, because it is non-institutional money.
Correct, exactly. And the reason for that is the non-institutional money does not have these reporting requirements under the anti-money laundering rules. In other words, when we go through the institutional lenders, our buyers, our entities that are purchasing property, if they're going through, let's say, Bank of America has anti-money laundering requirements already. And so they're submitting information on those borrower entities. And so this rule was to capture those buyers or borrowers that were kind of going outside of that framework to capture their details.
So I know one of the things that Sherry told me as we were talking about this before was that sellers would choose to not sell to buyers who were entities, or they could potentially choose that. How does it affect the seller? How does the tracking affect the seller?
That's a great question. So there was some commentary that sellers may be reluctant to sell to non-individuals that were purchasing the property with cash or with these private hard money lenders, et cetera. And the reason being is some individuals, sellers, might be hesitant to have their information reported to FinCEN for whatever reason, for whatever privacy concerns that they might have and maybe not understanding.
Because you're reporting both sides of all the information on the transaction.
Exactly.
And what does that mean? Like their names and their address? What gets reported?
Exactly. So on the seller side, it's less burdensome than on the buyer side. On the seller side, whether you're an individual or whether you're an entity as the seller, you have to report basic identifying details, your name, your address, your date of birth, your citizenship status, your tax ID number, et cetera. Pretty basic identifying details. On the buyer side, it's a bit more cumbersome. So it was all of those details basic identifying details. But in addition, it was the source of the financing, where you're getting the funds, the account information. Was it by check? Was it by wire? And in addition to that, it was also all of the entity details, of course, as well. So if it was an LLC, it was the address of the LLC, its tax ID number, all of the beneficial owners, i.e. those that had a 25% ownership or more, substantial control, and so on and so forth. And the same was with corporations and trust, essentially the same as well, the trustees' names, sometimes the beneficiaries, et cetera. So it was a lot more cumbersome on the buyer side than on the seller side.
Did people give you pushback during that time? I mean, I know it didn't last very long, and we'll talk about that in a second, but were people upset about it?
People were surprised by it and were questioning, why is this needed? And there was a little bit of pushback at the beginning. I think that it was, from our standpoint, there were a couple of things that we were able to say that I think made parties more comfortable.
We don't have a choice.
Exactly. Number one, we don't have a choice. This is not our decision. We're just following, what these regulations require. It's a nationwide rule, so we're not the only ones requiring it, of course, or the only state, for example, that's requiring it. And that the reporting requirement isn't necessarily saying, hey, we're investigating you. It's just, hey, we're gathering this data for their purposes of the combating the money laundering, the illicit financial activity, et cetera. And so that was able to, I think, talk some people down to a certain extent. And it was also, again, it was a requirement. If you wanted to go through this process, you had to report.
I mean, I've been licensed a long time, and I've never had a situation where I thought somebody was money laundering. Now, maybe that happened and I just wasn't aware of it.
Sure.
And we certainly get some weird scammy, are those proof of funds real? And sometimes there's some weird things about it, but I've never felt so do you feel like is that really a big problem?
It's an interesting question, because there is certainly that activity that's going on. And as I mentioned back in 2016, when we kind of started, or the federal government started these geographical targeting orders, they deemed that there was success in identifying transactions that were involved in some sort of illicit or money laundering activity. And it was through that success that they were stating that they implemented this rule. To your point, and I know we're going to get to this, but when the district court vacated the rule, part of the argument was that, or part of the court's reasoning was that, hey, FinCEN, you failed to justify categorizing all non-finance transactions where the buyer is an entity as inherently suspicious. As we were talking earlier, it's completely normal for trust, corporations, LLCs, et cetera, to go through various types of forms of purchases not using institutional financing. And so I agree with you on the point that nothing, or simply because you are purchasing all cash or using quote unquote non-financed money doesn't make a transaction suspicious. We see it all the time. But that's not to say that through these geographical targeting orders that were in place, that they weren't able to identify some activity, which led to kind of where we are today.
So the court said, no, you can't do that.
Correct.
Does that mean it's gone forever? Does that mean it's just what happens next? Do somebody appeal it, or what happens?
Exactly. We're kind of in this paused period, kind of a little bit of an uncertainty. FinCEN has given some guidance stating that, the title escrow companies, those reporting persons that are required to report the information, that you no longer need to report, given this Texas court's ruling. And so it's on pause. I do think that there will likely be an appeal, but as of right now, we're holding off.
And the Texas court paused it for the whole U.S.
For the whole country, correct?
Okay.
Correct.
Interesting.
Yeah, it's part of I guess how, in a way, the court system works, I guess, and the nature of the lawsuit. It was suing essentially the U.S. Treasury head, and part of the ruling and the purpose of vacating the rule was that it was to be applied nationwide and that they were overstepping their powers granted to them by the Bank Secrecy Act. Not to go into too much detail there, but again, blanket-wide, nationwide kind of pause on the rule, and we're now in this holding period to see what happens.
It does seem really invasive. Like,
it is.
I mean, I don't know. Like, and I don't, like, as an agent, I don't have to, like, if you tell me you're a trust, I don't ask you for documentation. I always say, hey, that's great. Title and escrow will need to have copies of your certification to make sure that you can really sign for your trust. I just believe that you can sign for your trust.
Sure.
I just sold a house that the house is owned by an LLC. Usually that's not, like, we don't usually see sellers as LLCs, like sometimes, but that's pretty rare in my world. But this is just a family that has a lot of money, and that's how they had their assets positioned. And I didn't have to prove that, like, the person signing for the LLC was the person who really could sign. I made sure Sherry proved that.
Exactly.
Right? Like, I made sure that, like, we were legitimate and everything was right. But I never asked for any of that documentation. And I mean, they probably would have given it to me if I asked for it, but it does seem pretty invasive to, like, let me see all of your articles of incorporation or whatever.
Sure. Well, to that point, that's part of the purpose of title and escrow companies, and specifically the title insurance company. We're ensuring that the buyer is getting marketable title, that the seller actually has the authority to convey the property, et cetera. So prior to this rule, just to be clear, title companies were already requiring that seller documentation in order to establish the authority that so-and-so has the ability and authority to sell that property to the buyer. So that was kind of already in place. In addition, you mentioned, having that information not necessarily flow through you, which I agree with. Part of the way that the reporting rule worked when it was into effect is that we had secure portals, and a lot of the title companies kind of operated the same way, working with a certain third-party vendors.
I was going to say they used a third party for that, right?
Correct. Generally, most title companies, at least to my knowledge, used a third-party vendor that would work with the title company, and they would send secure links to the parties, the buyer and the seller, to allow them to securely and confidentially report to FinCEN or to the title company, who would then turn around and report through FinCEN's portal that they created just for this. Part of that reasoning was exactly what you stated, to keep that confidential information kind of out of your hands or out of the other party's eyes.
And so did companies just, like, magically pop up to be that third party provider and then now magically gone again?
They jumped on that opportunity. I wouldn't say that they're necessarily gone. I think they are there and they are still active. We're all just waiting to kind of see what happens moving forward. Some title companies, not all, but some are still actually, again, to my knowledge, are still requiring the information to be collected. However, they're not reporting. And some of them have made that decision in order to be able to pivot pivot again quickly if there's an appeal and things are reversed.
Yep. Because hypothetically, if I had a closing on a certain day and it got reversed 2 days before that, it would have to all be reported, right? I mean, in theory?
Correct. So it was all essentially, yes. So it's all based on the closing date. So for example, if you've got a closing, I'll reverse it and I'll say, if you had a transaction that was opened up in February and was closing after March 1st, after the effective date, then that transaction was required to be reported. And so you're exactly correct. If a transaction opens up tomorrow and in 2 weeks, not that this is going to happen, but hypothetically speaking, it gets reversed, rules back into effect, then if that's closing after that effective date, then yes, it would need to be reported.
Do you think it's going to be reversed, or do you have any idea, or is there any way to know that?
Gosh, I have no idea. It's interesting because there was a court in Florida that ruled that it was permissible, that what FinCEN essentially was doing was permissible. Now we have this U.S. District Court in Texas that says it's not. And so there's kind of this conflict to a certain degree of courts taking different positions on it. So I believe that there will likely be an appeal and that there's going to be further litigation regarding this matter.
I mean, attorneys like to do that.
Attorneys like to do that, yes. They have to make a living as well.
Yep, that's fair. But really, from a practical perspective, it didn't change. It doesn't sound like it really changed much. Like a little more bureaucracy, a little more paperwork, a little bit more explaining of what the entities are. But
Correct.
since you're already verifying who is signing, it just doesn't sound like there was a lot more than what you were asking for before.
It wasn't necessarily. There was a little bit more identifying information being provided. There's no question about that. I would also say that I've sat through the forms or kind of went through hypothetically filling out if I was the seller or buyer on a transaction. And to be frank, you could fill out the information, assuming you had a simple structure, a buyer entity or seller entity, you could probably fill out the paperwork in under 30 minutes, 15 minutes. If you had it all in front of you, it's really was not that cumbersome. Again, on the buyer side, there was a bit more detail, and I think it was more burdensome potentially for the buyers that had really complex entity structures. So if you had a LLC, for example, where one of the members was another LLC, and the member of that LLC was a corporation or what have you, you would have to go all the way down to those beneficial owners, to those individuals that had substantial control, et cetera. So there might be a lot of
layers there.
Exactly. There might be a lot of layers that you had to go through. So that certainly would take additional time if you kind of fell into that category. But I would also say what's interesting, and it was part of the conversations that we were having regarding some pushback regarding these reporting requirements and the information that was being collected. And something that I would kind of share jokingly is that FinCEN is a department of the U.S. Treasury. And you know who else is a department of the U.S. Treasury is the IRS. And guess what?
The IRS
has all that information already, most likely anyway. So you're really not providing all that much more than what they already have.
Well, and you already collect like FIRPTA stuff. You already collect social security numbers and things as part of FIRPTA.
Correct.
And I know that's always a very, sometimes people are worried about that and worried about giving that out.
Sure.
And
all transactions, for the most part, I say all, but the majority of the transactions, the seller has to report the sale for tax purposes. The escrow companies are using the 1099-S reporting for reporting sales or exchanges of real estate. So there already is certain levels of information that's being collected and remitted, I guess, to the IRS to a certain degree. Of course, this was a higher level and more detail, but again, not all that.
I think it's just change, right? Like people just don't understand change.
Absolutely.
And I don't own properties in an LLC. I would like to. Once I have mortgages free and clear, I will. I tell my tenants my properties are in an LLC, but they're not really. But it does kind of make you pause of like, is it worth the is the protection worth the hassle, right? And
Absolutely.
That's the balance.
Absolutely. And in addition, there was another a line item showing on the settlement statement because there's a fee that is generally being charged for the reporting purpose. So, that was another, why is there another fee associated with the closing, for example? And I think exactly as you said, change. People are generally resistant to change. More information, more paperwork, et cetera, was being needed. And, maybe there's an eye roll or some frustration there. But I think by and large, at least for the 2.5 weeks that it was in effect, we were operating pretty seamlessly and did not really have too many headaches or issues with closing. And in fact, I recall one transaction where things were changed kind of last minute, where the buyer decided to take title in an LLC or some form of an entity at the very last minute, and closing was to happen the next day, and we were still able to close on time and accommodate that. So I think there was a lot of concern initially that it was going to slow these all cash or non-finance transactions, and everybody kind of likes those all cash, quick to close, less contingencies, et cetera. And so there was concern that this might delay things. And I think, again, in the short amount of time that it was in effect, we were operating just fine, and there weren't those changes. The things that we did encourage was communicate early and often with your escrow officer. Try to avoid those last minute source of financing changes or those last minute buyer changes, et cetera. But my
LLC seller that happened to fit in that just little window, they thought they might want to take the house out of the LLC and put it just in their name before closing. Now, we were on the market a long time. They had plenty of time to do this for months and months and months before, but they just decided like right before closing that maybe they wanted to do that. And Sherry's like, no, you can't do that. And it was too last minute, and there was too many other things going on. And there were some added complications of like one of the members of the LLC wasn't in great health. And so we just didn't want to worry about that because other people could sign for the LLC, but if it was just in their name, then we had those complications. But it was like, no, too late, right?
Yep.
So I think for us, it's too, as agents, it's like ask the questions early, right?
Absolutely.
Like we often have, especially trust. It's always trust of like last minute, like, oh no, I want to put in my trust. Like, why did we not mention this? 7 times while we've been talking about the offer.
Exactly. But they don't. And that was probably one of the biggest kind of questions or kind of confusing parts of this rule, because so many individuals work with attorneys in setting up trust for estate planning purposes. And oftentimes, as we were talking earlier, that parties would want to purchase the property in their trust. And oftentimes, as we were discussing, it was with all cash or what have you. And so that would trigger the reporting. And so then there was discussion, well, maybe I'll just buy then as my individual name, and I'll convey it to my living revocable trust, sometime after the transaction, potentially to avoid that reporting requirement, because there is an exception in the residential real estate reporting rule for conveyances from an individual to their living revocable trust for zero consideration. That would fall outside of the reporting rule. So we saw there was discussion.
Like, if you have that exception, what's the point then?
And that's a
wouldn't that
very
just be
fair
the easy
question.
workaround?
It was a very limited exception for those estate planning, living revocable trust, where the grantor, the individual, was the grantor of that trust. And so it was a very limited exception. And there are nuances to that. And so I don't want to, oversimplify it. But that was essentially the rule. But that's also, I think, the reason why that exception was in place was because that's not really what FinCEN was going after. Those are not the suspicious transactions that they were
it's
trying to
not grandma and
conduct.
grandpa who are paying cash and putting in their trust. And that's not who's doing it.
Exactly. That's not what the concern was.
There's also an exception around zoning, right? Because this is just residential real estate, not anything commercial.
Not commercial, correct. So the FinCEN defined, for purposes of the rule, residential real estate as 1 to 4 family. So your single family residences, your duplexes, triplexes, and fourplexes. It also, kind of a nuance to the definition of residential real estate, also included vacant land where the intent was to build a 1 to 4 family structure. So that was a bit different, I guess, than what we're perhaps typically accustomed to defining residential real estate was. And then the other nuance to it was mixed use property, where you could have a commercial, where you could have a mixed use property, for example, office on the bottom or on the first floor. Maybe you had a
apartment or stuff upstairs.
A single family structure or 1 to 4 family structure up top. That would also fall under the definition of residential real estate.
Okay. If you could redesign the system, what would you do?
I could redesign the system. Wow. That's a great question. If the question is for the purposes of trying to identify illicit or potential money laundering, I don't know that I would have such a broad blanket categorical requirement for requiring
like every
reporting
entity.
Just because you're an entity purchasing in all cash or what have you. I think that's hard to justify that category is inherently suspicious. So I would try to come up with a rule that was a bit more limited in scope, and I would need to take some time to think about how I would do that. But I think, again, they're trying to get at these shell type companies where they're trying to hide the identity of these owners.
Right, that's why they go down the beneficial ownership, right?
Exactly. That's why they're going back all the way down to who those beneficial owners are. And so I would try to narrow the rule and scope and really try to identify the types of entities or the locations of these properties or these areas that are being targeted. And I guess what I'm also kind of describing is the temporary geographical targeting orders that were in place that allegedly I was not aware of all of the statistics or the data that had come out from these geographical targeting orders. Again, it deemed that there was some success. I did see some information or percentages that there was a decent percent of transactions that were being reported in these high suspicious, I guess, riskier areas, that they were able to identify some illicit financial activity. So I guess that's where I would kind of, if I was going to criticize, I guess, the rule or give
you tighten it up.
cusp, I tighten it up.
Yep.
I would narrow it much more in scope. And yeah, let's look more at the particular geographical areas that we're more concerned about.
Well, and when you said multifamily, duplex, triplex, fourplex, those are almost always in an LLC. Like
Correct.
Those owners often hold things like that in an LLC. So that would be a big percentage of that small investor portfolio would be affected.
Correct. There's so many reasons why parties want to put the properties into some sort of entity, whether it's an LLC or a corporation, and not just for estate planning purposes, but for shielding liability, for tax reasons, and so on and so forth, various business reasons. So that's very normal and doesn't immediately raise a red flag. Again, as we were talking, we see those transactions on a daily basis.
Yeah. So this is paused and off of your plate somewhat right now. What is is there other burning changes in the title and escrow world that has people up in arms, or with this out of the way at the moment, are things just kind of quiet?
I wouldn't necessarily say it's quiet. I think it's so funny because there was so much preparation, training, and work that went into getting ready for this rule to go into effect and ensuring that we had the processes in place to meet the requirements of this rule and make it as seamless for our customers as possible and have no hiccups. So it's funny that simply 2.5 weeks after going into effect, it's all taken away. That's not to say there's not things that are that we're not concerned about or that is on our radar. And I would say probably one of the biggest things is fraud. That is, we see more than I can tell you. And I think just last week I probably saw, we were able to identify 6 deeds in various locations that were allegedly a fraudulent seller. And so it's out there. That's a big part of our industry.
That is people saying they own things they don't really.
Correct.
And trying to sell it.
That is a fraudulent individual impersonating the seller or the owner of a home and trying to sell the property and get the funds and go off and do whatever they do.
It's like in my world right now, everybody wants to meet on a Zoom call, but they want to set the Zoom call up.
Yep.
And it's like, I'll meet with, and I have to answer the phone. I have to respond to emails. I have to assume these leads are actually really leads because it's like they're asking about one of my sellers and my listings, it would be for my sellers. But as soon as I'm like, yep, happy to meet you, no problem. I'll send you the Zoom link. They disappear, right? That's the current
They
scam.
don't want,
Yep. But they want to send me a Zoom. And sometimes I won't disappear. Sometimes they'll be like, great, no problem. And then when we are supposed to be meeting, they'll text or call or email, usually email, and say, it's not working. Here's my link.
There's some sort of excuse or there's some sort of urgency
but
or emergency.
It's easy to fall for that stuff, especially if you're busy and you're going and you're just doing things.
Of course. There's some sellers, parties that only wanted to communicate through WhatsApp, for example. I mean, some immediate, red flags that make you kind of question, what's going on. But it can be very difficult to ascertain.
And technology, it's easy to make a fake looking deed, right?
The fraudsters are getting better and better. They're constantly building better mousetraps and better mechanisms. And the interesting, in my mind, from the title insurance company standpoint, or the title insurance industry rather, is that, again, we're ensuring that buyer that they have good title.
Yep.
So we're the ones on the hook if we're ensuring.
So what do you do? How do you figure out how do you know?
There's a lot. There's a lot of systems and processes that we have in place to help, suss out these suspicious types of transactions. And there are, kind of akin to the geographic targeting orders or the FinCEN real estate reporting rule. There are certain types of properties that tend to be more targeted than others. So vacant land. Vacant land.
That's why I always feel like I hear about it, but I've never had any problems personally. But
vacant land tends to be a higher target. Non-occupied properties are also, there was part of the scheme that I was telling you where we identified a number of potentially fraudulent deeds. I think the fraudsters were able to identify homes from an online rental website that knew that they weren't occupied. You've got owners that are probably living potentially in different states, even in a different country, not paying as much attention, and they're kind of targeting those sorts of properties from what I've seen more heavily. And so there's just.
Did you find your 5 early enough?
So some of these were with our company, some were with others, but yes, the majority of these were able to be identified prior to, because of the systems that we have in place and the requirements of the escrow officers that they have and whatnot. So that's not to say that things haven't happened.
Right. It could happen, right?
It can happen.
How about wire fraud? Is that still a big issue? Like, I mean, I've had it happen one time in my world. That was very sad. And I actually had a very savvy young buyer that had it happen to, but it was Christmas and they weren't paying much attention. But I haven't heard about it happening lately. Are people just more careful or
I think so. Wire fraud is another one where, yes, it's still out there. We are hyper vigilant with that, and we have very strong policies.
I know it's kind of annoying sometimes.
I'm sure it is, but it's for your protection. It's for your client's protection. And
I mean, I used to be able to email them the wire instructions, and I'm like, those days are gone.
Those days are gone.
But I don't want the liability either, right? Like as a company owner, I don't want the liability, so it's okay that it's gone. But like. Sometimes I'm like, nope, sorry, you got to call. Nope, you can't change that.
We're not emailing wire instructions. Exactly right.
So, if you want to change it, you have to have it renotarized. Like, it's a big deal.
Exactly. It's a big deal because it's easy, relatively speaking, for that to be fraudulently adjusted or changed or intercepted somehow. And that is something that we watch, and we think, I think we've done a great job at combating that because of those procedures that we have in place. So, and I
mean, and we all know to talk about it too, right?
And we all know to talk about it. Exactly.
My client he lost $12,000, which in the grand scheme of things could have been way worse. Like most of my clients put way more than $12,000 down. So that was very, quote, lucky. But we had talked about it. Like I had said, hey, this is how it works. Wire instructions never change, whatever, He just got busy and he thought the lender changed it. The email looked like, it didn't obviously come from the lender. It looked like it came from the lender.
Yep.
And said, here's the updated wire instructions. Here's where you send your money. And I called him and I'm like, hey, we know closing is on Friday, whatever. You know wire your money. He's like, oh, I already did that. And I'm like, oh
no, that's terrible.
Then I'm like, I bet you have a problem.
And sure enough.
Yep.
And it's easy because it does. It looks like it's coming from the lender or whomever.
I was really glad it looked like it came from the lender, not from me. But.
Yep. And I've seen too where
both ways,
scammers mimic the real estate agent's email address by just changing a letter or two
and he said when he went back and looked, he's like, it wasn't the same. He's like, I should have caught it.
Yep.
But you just don't like...
You're moving fast.
Life's just moving,
Exactly. So it's tough. But that's, I think you highlight such an important point. That is just another value add that I think real estate agents have with their clients and talking through with them and helping them prepare for what's to come and what to watch out for, along with the title and escrow as well.
And I like telling you, like he was like 25. He wasn't like 75 where sometimes you might feel like there's a little bit more risk. But like my mom called me recently. She's like, my power's getting turned off. I forgot to pay my power bill. And I'm like, did you really forget to turn your power bill off? Or your power? She's like, it was a scam, wasn't it? I'm like, call your credit card and cancel because you just gave your credit card number to somebody. As soon as she told me, she got it, right? Yep. But you just like...
Oh, totally. And just my parents had come up to visit a week or so ago, and my mom was showing me a text that I think it was from the DMV or something, allegedly saying, oh, you need to send your information and blah, 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 and showed it to me and was like, is this real? Is it? No, Mom. Delete it, report that as spam. But yeah, it's everywhere. It's not just in real estate. It's credit fraud, all of it. It's out there.
You just got to be careful.
You got to be careful.
Yep. And I also think that if you're asking if it's real, It's not.
Exactly.
Like if you have to ask yourself, you just have to like,
Yep.
nope,
Trust
sorry.
your gut.
Yep, it's
Trust
not.
your
It's
gut.
not real, or it's not right, or not legitimate. Anything else to wrap up about FinCEN that we should know that we didn't talk about that's important?
Oh gosh.
Or just kind of stay tuned.
Stay tuned. I think it's. I think there will be more information coming. In the near future-ish. Pay attention. Watch for whether there's an appeal. Talk to your title and escrow companies. We're staying on top of it. We're always happy to answer questions. But there will be more. This is not the end, if I would have to guess. So
yeah. Thanks for joining. If you like this content, remember to subscribe, send me a message in the comments. Let me know what else you want me to talk about. And I look forward to hearing you again.